The 2024 housing market right here in San Diego was one of the more normalized housing markets we have seen in the past few years. But what does that mean if we see the same type of thing going into 2025? Now, we did see the number of closed sales kind of mirror last year, but still down from the previous years. However, we did see home prices still rise, only modestly compared to the last few years. So if we go into 2025 and the housing market looks similar to what it does right now, what does that mean as we go into the new year? As always, thanks for tuning in. I'm Chris Erickson. We got a real estate crew right here in San Diego. If you guys are thinking about making a move and you want to start that conversation, all of our contact info is right below. We got your back when making the move here in San Diego. So right now we're looking at average sales prices for San Diego. Where did we go throughout the year? And the top line is going to be single family homes. The bottom line is going to be condos or townhomes. So starting off in the single family homes, we started off the year, or we ended the year rather, at just over $1.25 million for the average sales price. As we went through the year, you usually see a little bounce up going into the beginning of the year, peaking out sometime April, May, or June. And this year was no different as we went down, and you can see home prices did peak in earlier in that April month, and we ended the year at $1.309 million. As we're looking over here, you can see that's up 4.6% compared to last year. Now, when we looked at this chart a few years ago, that number was much higher. Home prices appreciated throughout the year much quicker. So when I say back to a more normalized market, this is what I mean, where we're seeing home prices go up, 4 to 6%. In the condo market right here in San Diego County, it went up 5.6%. So what happens if we see this do the same thing next year, where we see single family homes grow 4.6%? We're putting in that $1.039 million, and we are adding 1.046% to it. Home prices next year will end at $1.369 million. So almost $1.37 million. Same thing here for condos. If we did see a 5.6 appreciation going into 2025, or ending the year there rather, let's just see, we end up at 800,000, over almost 801,000, $800,976. Now jumping into closed sales, or the sales volume we did see this year. Now looking at last year, you can see just on a relative basis, you can see we're about the same. We are up about 17% for this December reading right here. But if we go back just to that 5-year chart, we're right down here in this low section, under 2,500. The number of closed sales per month never got over that 2,500 mark. As you go back into 2022, we broke 3,000. You get into 2021, 4,000. If you get to a normalized year, I would say in 2019, about 3,500. The number of homes was much less than in previous years. And I think part of the reason that is because obviously there were less buyers out there, and partially because interest rates did hover around that 7% for a lot of this year. Now, as the Fed was cutting rates, expectations were potentially that this was going to drop. However, the Fed has cut the Fed's fund rate by 100 basis points. In that same time, mortgage rates have gone up about 100 basis points from when they did start cutting. So if interest rates do still stay elevated in that 7% range for next year, we could expect sales to continue to be a little bit depressed as far as the number of home sales out there. It does keep some buyers out of the market. Affordability gets a little more difficult, and just even getting a loan and getting approved, it is a little more difficult. If interest rates did drop into that 6% range or sub 6, then I think we would start moving a little bit towards these higher closed sales per month. Now looking at month supply of inventory, typically a kind of balanced market. We're not heavy sellers, we're not heavy buyers, is when you get into that 3 to 4 range that we did see actually bump into for the first time in the last few years. So July and August is kind of where we were there in this year. We haven't seen that since September of 2019. So basically, if there's more homes coming on the market and they're not being sold as quickly, this number will rise. So it gives you a good indicator of, are we in a heavy buyer's market? Are we in a heavy seller's market? What are we looking for? Supply and demand. Over these past few years, it didn't even touch 2.5 months. When we were down here in December of 2021, January 2022, it was 0.8 months. But we will see this pop up just like last year, coming out into January, February. As we get into those July, August months, we will see months supply rise as more homes come on. This is typically when you see the most home sellers. Now, if this continues and goes past this 3.2 months that we did see in August last year, we are definitely going to see buyers start to have the upper hand, which we did see in parts of this past year where homes aren't necessarily going off that market the first weekend. Maybe they are sitting a little bit and they're not necessarily getting those multiple offers like we did see in this super low inventory times where it was 5, 10, 15, 20 offers. Now, homes that are priced well and are still selling relatively quickly, we'll get into how long they're taking to sell here in a sec. But right now, at the end of the year, we're sitting 97.3%. So $1 million home was selling just below that asking price. Once you go over that 100%, obviously like back in this time when we did peak out, the average home sale was going for 106, almost 107% of the original price. So if we see a continuation of this and we see a similar pattern to where we did last year, you'll see competition grow a little bit as we go into those summer months, as more buyers come into the market, which is typical. So as you're going into the March, April, May, that's typically when you're going to see the most competition out there, where homes maybe do go up above a list price a little bit. Now, how long is it going to take to sell your home in 2025? Once again, neighborhood dependent, but San Diego County as a whole, we ended December at 34 days. You can see the latter part of this year, we saw just consistently rising days on market. We haven't seen that since January of 2023. From this time in 2022, as we did go towards the end of the year, that was when we did see one of the first interest rate hikes in the mortgage rate. So mortgage rates rose quickly. The market slowed down quite significantly and then got a little more normalized going into 2023. At the peak of the market, right here, averaging days on market was 11 days. So we're well off this. It's giving buyers a little bit more time. Now, this doesn't tell the whole story. 34 days is for homes that have actually sold, have actually closed. When I was just looking at the MLS right now, all the homes in San Diego County, there's about 3,300 on the market right now. They're averaging about 44 days on the market. So a little bit above this. It does take into account new homes that came on the market, takes account homes that have been on for 100 days, obviously averaging all that out. But as we're going through all this, what this is telling me, if we have a similar year to 2024, we're going to see a few more homes coming on the market than we have seen in past years. We're going to see kind of a more normalized market where they're not necessarily selling that first weekend. Now, homes, yes, definitely do sell that first weekend. It happens. A certain percentage of homes always sell that first weekend if they're priced right, if they are in a great location, if they are in a highly desired neighborhood. Yeah, those homes definitely sell and dialed in. And we've seen, more importantly, that preparation part of getting your home on the market has become even more important over this past year, where in years past, yeah, you do some prep, yeah, you put it on the market, but there's so many buyers out there. It wasn't as important as it is now in getting the home dialed in for those initial showings and pricing it properly. Homes that are not priced properly are sitting above that average of 34 days. Maybe they're sitting 45, maybe they're sitting 55, 60 days on the market, and then having to do a price reduction at some point. So that initial pricing of a home is super important as well. But as we go into the new year, we're going to continue to keep you updated right here. And if you have questions or you want to start that conversation, I'm Chris Erickson. All of our contact info is right below in the description. Feel free to reach out because we got your back when making the move here in San Diego.